Hey guys, welcome back. What a strong day we had across the memory sector today. It was nice to see all 5 members moving in the right direction. We haven't seen that in a while, so I really enjoyed watching it today. But honestly, over the last 48 hours, we have received fresh data from literally every layer of the physical AI stack. We saw earnings from CoreWeave and Nebius. We saw Cerebras today drop their earnings, and it focuses on what we're seeing for the demand and compute. And we also saw Coherent, Lumentum, as well as Cisco this week that is telling us everything we need to know about the demand in the networking and connectivity layer right now. And despite all of them operating in completely different parts of the ecosystem, they are sending remarkably similar signals this week. The signals that they're sending is that demand isn't the problem in this market. The biggest problem is getting enough physical infrastructure online. It is the scarcity of supply. That is the biggest problem today. It is also one of the biggest benefits for the memory sector and why they are continuing to show just strength across the entire sector. So in today's video, we're going to dive into the major stories that I saw today. We're going to take a look at the earnings data that did drop on the street today, because not only did we see Nebius, we saw Cisco, Coherent, as well as Cerebras. So I want to go through the major signals that they dropped and what it means for the memory sector. And then let's take a look at all of the memory players, because today was a strong day in the regular trading session, but it's looking to be like we're continuing to see that momentum move over into the after hours. I want to talk about the structural thesis behind the investment case for Micron right now, and also why we may be moving into custom HBM era overall, something that Micron addressed at their investor day at the beginning of the week. And then let's talk about the SanDisk investor day tomorrow, the high stakes major catalyst event for this company, for the sector. What should we expect to hear from them tomorrow when they address their investors overall? And then, of course, at the end, what would this sector be without always seeing some level of headwinds? So let's talk some ongoing headwinds that resurfaced today. We're going to talk a little bit about Michael Burry. He's making news again. Let's talk about what he actually said with regards to Micron and some other players. Lots to cover in today's video. Make sure you hit like, make sure you subscribe to the channel, make sure you stay through the whole video, because I'm going to cover a ton of data that you need to know if you're an investor in this sector. And if you haven't joined Market Signal already, because this is the type of content I put out each and every day to bring more insights and knowledge to you, so ultimately you become a better investor. Let's get started. Let's take a look at the earnings that we saw today. Let me pull them up on the screen. Like I said, I wanted to go through all 4 of the ones that we saw today, so you can see Nebius, Coherent, Cisco, and Cerebras. So as the headline says, the AI infrastructure is accelerating. That's what the earnings told us today. And I want to show you what each one of these mean for the memory sector. So let's start on the left with Nebius. Nebius dropped a revenue of $582 million. It's up 454% year over year. But more importantly, look at their cloud, their annualized revenue run rate right now, $3 billion, up almost 600% year over year. Their CapEx was $5.7 billion. It's primarily GPUs, GPU-related hardware, and data center. And why this is important for the memory sector, or the relevance to the memory players, is that massive AI cloud expansion and billions in GPU infrastructure, that drives strong, sustained demand for HBM, server DRAM, and storage across the board. So I'm going to get into a section after I go through these and tell you why the earnings that we saw from Nebius, as well as that we saw from CoreWeave, may be the most important AI demand signal that we're seeing in the market right now. Coherent, they dropped it today. They had revenue of just over $2 billion, up 42% year over year. But more importantly, their data center and communications revenue was up 59% year over year, and it's making up about 80% of the business right now. Their earnings per share was up 1.47. This was a beat across the board for the company. It was for Nebius as well. The earnings per share was up 74%. And why the Coherent data is important to the memory is that soaring demand for high-speed optical lasers and networking, it enables a scale-up of AI clusters and accelerates data movement. This will enable the scale-up of the AI factories that NVIDIA wants to get into. And we know that exponentially scales up the amount of memory that is needed as well. Take a look at Cisco. Their hyperscaler and AI infrastructure orders are up 4.5x year over year, just about 9.5 billion. Their Q4 AI infrastructure orders is 4 billion, and the AI infrastructure revenue outlook is 7.5 billion. So memory relevance for here, as well as we're seeing explosive AI orders and strong outlook. It confirms the unprecedented build out of data centers, networking, and high bandwidth infrastructure. And finally, Cerebras, we know that's a different type of memory memory architecture around SRAM instead of HBM, but they're seeing strong results as well. Their core revenue was up over 100%. But more importantly, look at the remaining performance obligations, 25.4 billion. So this is showing us that AI inference is a real thing in the marketplace. We are moving into the inference phase. It's exactly what this shows us, because Cerebras' wafer scale architecture, it bypasses HBM, but honestly, it's very complementary to HBM. We're going to see a world where SRAM, HBM, and other memory and memory products are working together to efficiently make sure that these architectures can work and deliver what they need to do new and not just sit idle. But across the board, the takeaway today was, whether you're looking at compute, connectivity, or networking, and alternative architectures like Cerebras, today's results confirm one thing, that the AI infrastructure demand is exploding. More infrastructure equals more memory demand. So we saw more compute, more faster connectivity, bigger networks, and we saw alternative architectures. That was the theme of the day, and it's all positive signs for the memory sector. And if we look at this article that I saw on investing.com, it talks about the most important AI demand data that's available. And it's really focused on the CoreWeave and the Nebius earnings. Because it says hyperscalers tell us how much they want to spend. Chip and equipment vendors tell us what is shipping, but neo clouds show whether customers actually are renting the infrastructure, at what prices, and how long. And what CoreWeave and Nebius just showed us, it provided the most important demand side confirmation of the AI cycle that we have seen yet, or what has been produced yet. So CoreWeave's revenue surged, but the forward indicators are even more telling, as the article says. CoreWeave finished Q2 with 104 billion in backlog. It's up to almost 250% year over year. If you remember, I said last night, it was another 25 billion in July in backlog. As actually the next sentence says, pricing was raised 25% in July. And more importantly, we're also seeing that the older A100 hardware has been extended through 2029. So capacity is selling out immediately upon deployment. Nebius is growing even faster. The revenue soared 454%. Their annualized run rate revenue jumped 56% sequentially to 3 billion. But management said on their call today that they could sell out all of their planned capacity for 2027 today. That's how much demand is in the market right now. And backlog exceeded 40 billion for the company. So both companies said the same thing essentially in their earnings, that newly deployed capacity sells out immediately. And the constraint is physical supply, not customer demand or customers' willingness to pay. Pricing is strengthening. It's not requiring discounts. So the NeoCloud model is validating itself as something more than just the GPU rental. And what we're seeing right now is both companies are becoming more important to the AI stack overall. They're not commodity compute providers anymore. And this evolution, it creates stickier customer relationships, better economics, and it's further raising the competitive moat against the hyperscalers they are supposedly competing with. So this is great signal for the AI demand, and we know more demand drives more memory overall. So let's jump over and take a look at what the memory providers did today. Let me refresh my screen just to make sure we're getting the most accurate after hours. But you can see this was a broad validation across every single one of these stocks. It wasn't one moving up. Some didn't decouple from the other. They all moved in parallel. They all moved up today, essentially just kind of getting back in this bull run that we need to see. Micron was up almost 5% today, $43, just under $43 for the stock. It closed at $911.29. So it was great to see it break the 900 barrier, get over it, hold over it. It actually got back up to the $1 trillion valuation again at one point today, because I think the high was about 935 today at one point. It just dipped back down below. But in the after hours, we're seeing another 1% on the board, another $9 right now with Micron. It's close to $920.50. So we'll keep our eye on these as we move through the night and into the opening bell tomorrow. But everything looks really healthy right now with the memory sector. SanDisk was up over 5.5% today, $73 on the stock, closed at 13.44. So sitting really nicely right before their investor day tomorrow. Will that be a catalyst for the stock? We'll keep pushing it up, maybe getting close to that $1,400 a share, or will we see profit taking based off good news? That's one thing we just have to keep our eye on tomorrow, because we know this stock can move quickly one way or the other. But we saw strong growth today with Western Seagate as well as SK Hynix, and all of them are moving in the after hours as well. But let's talk about a few stories that came out that validate the Micron thesis, or the Micron investment thesis. This was one I wanted to talk to. I mentioned it last night, how ridiculously low the forward earnings is right now for Micron at a 6.26. It is incredibly discounted, as the author says. But let's go through some of the numbers overall. It says Micron is the highest beta expression of the repricing that we're seeing in the market right now. They mentioned some of the inflation data today that also helped this sector it caused them to bounce a bit, just the fact around removing some of the inflationary fears in the market. But the stock is trading at 6.26x forward earnings with 346% year-over-year revenue growth. It is just ridiculously low right now. And they mentioned the comments that they had earlier this week at their investor earnings, the recent management commentary reinforcing that AI-driven demand for memory hardware is expanding faster than the manufacturing capacity can be added in the market right now. So we see no short-term stop, no 2027 kind of demand supply catching up to demand. It's going to be incredibly constrained. Micron trades at 19.7x trailing earnings and 6.26x forward earnings against a fiscal Q4 guidance of $50 billion. And a EPS of $31. Consensus across 46 analysts sits at $1,500 a share, implying a 73% upside from where we closed on Tuesday. The company has $1 billion of contracted backlog under 16 customer agreements and cannot fulfill more than 2/3 of customer demand. This is the strong thesis we're seeing in the market right now, and it's not letting up, guys. We are not going to see a loosening of this constraint we're seeing in the market. It's going to continue to be tight. That's what we're hearing from every single industry leader as we go into 2027. We just have to believe, and we have to truly understand that this sector, this memory sector, is being structurally re-rated. It is not the same as the past. It is not the PC and smartphone sector anymore. It's beyond data centers even at this point. But the counterweight is real. And I want to give some of the bear case here that the article called out, because it's mentioning that insiders dumped over $160 million in the trailing 3 months with no open market purchases. And it also references the city. Even though they maintained the buy, they did reduce that price target. And we talked about that on the channel. They reduced it to $11.50 from $1,400. They're also talking about the fiscal 2027 EPS estimates and how they've advanced 1.2% over the past month after jumping from 95 to 154 over 3. So the stock lost the $1 trillion market cap on July 16th, although it did reclaim it momentarily today. It's just below it right now. With another strong day, it'll actually reclaim it. But the author says here is to buy the gap, target the 1150 with a stop at 854.46. For those out there that are concerned, that's the advice from this author on the price point you should target and where you should put a stop loss essentially into your trading platform. So that's the case for Micron right now. It's incredibly strong, but there was an article I wanted to go through on TrendForce because it was a comment that was also made at their investor day when their chief business officer said we could be getting to an era of custom HBM. So that's what this article in TrendForce walked through, and I want to share it with you guys. It says Micron flags their HBM4E as the start of custom HBM era. An HBM market could tilt towards a dual or single supplier. And I actually heard some analysts say that this would be a very positive sign. It would actually increase the valuation for the memory players because it would remove some of the fear around the cyclicality in the market, that supply would come in and that it would just flood the market and we would see just the values drop for these companies. But if they have long-term arrangements, and if we're in these relationships with these key hyperscalers and key companies where they're only getting supply from one or two companies, it actually removes a little bit of the anxiety and fear. At least that's what some analysts were saying, that we wouldn't be worried as much about just the valuations collapsing, pricing collapsing in this type of environment. But we'll go through, and Micron says the memory, we know memory giants are increasingly turning to HBM as the next growth engine. During that investor call, he pointed to the potential shakeup in the HBM supplier landscape, given the time, the R&D, and the cost involved in HBM design and qualification. He says customers are unlikely to work with all three HBM suppliers across every project. I don't know if that's true or not, but this is the case the TrendForce is laying out. And I'll show you a picture down below, which gives some examples overall. But we know the reason why, and we know what HBM is causing in the market. These next two paragraphs talk about the wafer consumption of HBM and how it just eats up all the wafers and has a spillover impact into the DDR market, into the DRAM market overall. But HBM's rapid ramp up is also putting pressure on conventional DRAM supply. And that's the pressure we're seeing in the consumer markets, and we're seeing in other areas as well. And it's tightening an already constrained memory market. They reiterated the 3-to-1 HBM to DDR trade-off. Producing 100 bits of HBM3E effectively requires sacrificing around 300 bits of DDR5 or just DDR supply. The capacity squeeze is expected to intensify as we move into future generations. We're already on the path to HBM4 with supply being ramped up right now. I've seen plenty of articles talking about HBM5. We're moving beyond into future generations already, and it's just going to continue to sacrifice these wafers and put more strain on the DDR market. So Micron, they say that as we move to HBM4, you're going to see that sacrifice move from a 3-to-1 to a 4-to-1 ratio. And here's the box that I want to get to below, because we also know that we're seeing a bit of a shift with the three companies. So Micron, they are moving for their HBM4. They're still using the 1 beta DRAM for HBM4, but they're going to transition to their 1 gamma DRAM for their HBM4E. And remember, they're also going to move into a partnership with TSMC. So they will, where today they produce it all in their own fabs, moving forward, they confirm that the logic dies for both standard and custom HBM4E are expected to be manufactured by TSMC. We know that Samsung will keep everything in-house, and SK Hynix has kind of a partnership across TSMC and NVIDIA as well. So everyone has a bit of a different approach. But here's the box I wanted to talk about, how Micron called it HBM supplies heading towards a 1 or 2 vendor kind of setup overall. And you can see the customers here on the left. So NVIDIA, for their 2 products, whether it's the Vera Rubin or the Blackwell, today there's major suppliers. So Vera Rubin, we see SK Hynix and Samsung. Micron has the low share, so you could say they're at risk there if they move to a 2 suppliers. But today there is a 3 supplier setup. For Blackwell, there's 2 main suppliers. There's SK Hynix and Micron. Samsung was the late comer for that architecture. And we look at AMD, they are going with a primary supplier of Samsung. And Google, for their TPU, their V8, that HBM4 is going to be provided by Samsung and SK Hynix. And their TPU, the HBM3, is going to be provided by Samsung and SK Hynix. So a 2 kind of a setup there for Google overall. So we could see the market move this way. I know Micron has been talking about this and thinking about it, and their thoughts are we may see the market shift this way overall. So I think it's an interesting piece. I think it removes some of the cyclicality concerns, and actually it ultimately could be a positive sign for the valuations of these companies long term. So let's shift gears a little bit right now. Let's go over to SanDisk, because we know they are there's a major event happening with them. In the after hours right now, we're seeing about 1.5%, almost a $20 gain, $13.64. But let's talk about what we expect or what we need to hear with SanDisk tomorrow. So Evercore goes through this pretty nicely. They call out all of the areas, 5 items that we need to be watching for. Number 1 is essentially its pricing, its NAND pricing. We've seen their average selling prices jump 350% since the start of 25. And the firm expects the company to refresh it through cycle targets and capital allocation network. They're also talking about buybacks. So this is a key piece they want to listen to. The fact that they're modeling for free cash flow of about $35 billion. They're expecting to see a strong kind of buyback and reduce the float for the company by roughly 10% annually. We also need to hear more around the new business models, the economics behind those models, because we see today's gross margins are at 80%. So we're way over the prior cycles where we are about 35%, but we do feel, or this analyst feels, that the margins will be closer to 65, 70% with these new long-term contracts in place. So I'm listening for some more information related to the margins overall. And then probably two other things is more information on the contracts themselves. The 10 contracts that they have with 8 customers need more details about the shift to these deals and the economics behind the deals overall. And finally, the HBM, the high bandwidth flash. We need some details around high bandwidth flash. I know that's what I'm primarily listening for, because the piece with high bandwidth flash, we know that it's a huge announcement for both SK Hynix and SanDisk, and as that becomes more commercially meaningful, what it means is that SanDisk can start to be looked at as a bigger company beyond just the NAND product and the NAND cycle. They can become a bigger part of the overall AI memory architecture story. So this is a big piece for their future. We also saw Kioxia and SanDisk announce a new product last night, and that was part of the reason we saw massive movement today with the stock. So really looking forward to this investor day tomorrow. I think it's going to be a major catalyst for SanDisk. It's going to tell us a lot about the future and where this stock is moving overall. But as I said in the beginning, this wouldn't be the memory sector if we didn't have some headwinds to talk about. So we'll go through real quickly. We saw Michael Burry made news today. I don't know if he made news just because the memory sector is moving and he wanted to get his name, and the fact that he has a short position out there again to help his own kind of personal investments and his own personal financial concerns. But he did put it out there that he is adding to his shorts on Nebius, Oracle, and Micron. We go through some of the data. He was actually firmer, probably the most firm against Nebius. But let's call out what he said. He's adding to his short position at Nebius at 247, Micron at 924, and Oracle is a short at 152. So let's see if this short holds Micron back a little bit, because we know right now Micron is trading at, let's see where it is. If I jump back, trading right now at 924 in the after hours. So I'm curious to see what impact this has tomorrow at the opening bell. But if I go through Nebius in general, he says Nebius is what a top of a boom looks like. The company is negotiating shorter duration deals at 40 million to 50 million per megawatt, and sometimes above, compared to the 20 million to 25 million per megawatt for its midterm contracts. So Burry's question essentially is, why would customers pay twice as much for short-term compute contracts? Urgency and convenience at twice the rate, that is extreme urgency. He's essentially saying that buyers of the compute are putting tremendous value on near-term use and less value on long-term use. And Burry described the pricing structure as backwardation. He said power does not depreciate. So either the GPU is depreciating or the customer is depreciating, or likely it's both. So he noted that Nebius extended its server depreciation schedule from 4 to 5 years, and he said the company is counting on roughly 50% annual decay in its deals while adding another year of depreciation to its books. So those are the concerns that Michael Burry has about Nebius, and of course he added to his short position to Micron and Oracle, as well as the SOX ETF. So let's see what it does. He's getting his name out there as always and trying to make headlines around his short positions and trying to influence the stock. So to me, guys, overall, I think the takeaway for today, the takeaway that we've seen over the last couple of days, is the demand side of the equation continues to look incredibly strong. CoreWeave and Nebius are selling future compute capacity. Cisco, Coherent, and Lumentum show that the network underneath those clusters are continuing to scale at a significant rate. And Cerebras showed that the AI compute demand is expanding beyond conventional GPU architectures. And Micron is telling us over and over that it can only satisfy 50% of their customers based on the demand that we see in the market right now. Tomorrow, we get to test the other side of the memory thesis outside of DRAM and HBM when we hear from SanDisk. They will tell us and let us know if NAND producers can maintain these extraordinary economics as competitors begin adding more capacity. Because We heard news that Samsung and SK Hynix are going to add more capacity for NAND. We also have seen reports that NAND pricing may be softening in 2027. So these are the exact things that we need to hear from SanDisk tomorrow at their investor calls. And those are the signals that I'll be watching tomorrow overall. But let me know in the comments below, what signals did you take away from today? And what signals are you watching in tomorrow's market? Guys, I hope you enjoyed the video. Let me know your thoughts below. And if you haven't subscribed to Market Signal yet, do me a favor, subscribe to the channel. Have a great night.